Hello everyone, I'm CA Neeraj B and welcome to my YouTube channel @Accounting Buddy NB. In today's lesson, we build a strong conceptual foundation by understanding the complete classification of accounting errors, including errors of omission, errors of commission, errors of principal, compensating errors, and one-sided and two-sided errors. Through practical examples, we explain why these errors occur, how they impact ledger accounts and the trial balance, and why some of the errors remain hidden despite the trial balance agreeing. Before learning how to rectify accounting errors, it is essential to understand what the errors are and how they affect the accounting system. This lesson lays that foundation and prepares you for the practical rectification entries covered in the next part of this chapter. So sit back, relax, and watch the full video. Let us familiarize ourselves with the concept of rectification of errors in accounting. In accounting, maintaining accuracy in financial records is crucial for presenting the true financial position of a business. However, despite careful recording, errors may occur due to human oversight, incorrect posting, or wrong classification of transactions. The process of identifying and correcting these mistakes is known as rectification of errors. It ensures that the trial balance tallies and the final accounts reflect correct figures. Understanding how to detect and rectify errors is essential for every accountant as it upholds the reliability and integrity of financial statements. The trial balance, a statement of debit and credit balances of ledger accounts, is prepared to check the arithmetical accuracy of books of accounts. The total of the debit balances of the trial balance should be equal to its total of the credit balances. This is basis on the principle that in double entry system, for every debit there is a corresponding credit of equal amount and vice versa. However, a matched trial balance is not a conclusive proof of the complete correctness of the books of accounts. Errors can be classified into error of omission, error of commission, error of principal, and compensating errors. We will learn these errors in detail in subsequent slides. Let us now learn more about error of omission. When a business transaction or an event, if completely or partially omitted from being recorded in the books of account, is categorized as error of omission. Now, error of omission could be the error of complete omission or an error of partial omission. Error of complete omission arises if a transaction is not recorded in the books of accounts or a transaction is recorded in the journal or the journal proper is not posted in the ledger. Such errors do not affect the trial balance. Examples of error of complete omission are goods purchased on credit from Tolly LLC not recorded in the purchase book. Another example could be goods sold on credit to Molly LLC not recorded in the sales book. Old machinery sold to Raleigh LLC on credit recorded in the journal proper but not posted is also an example of error of omission. In this slide, we will learn about error of partial omission. Error of partial omission is an error where a part of transaction and not the complete transaction is omitted to be recorded. As a result of such errors, the trial balance does not match. Some of the examples of the error of partial omission are credit sale of goods to Tolly Trading LLC recorded in sales book but not posted in Tolly Trading LLC account. Omission to balance an account is another example of error of partial omission. Omission in carrying forward the total from one page to another is another example of error of partial omission. In this slide, we will learn about the error of commission. Errors of commission are those errors which arise due to wrong recording, wrong posting, wrong carrying forward, wrong casting of subsidiary books, and wrong balance calculation of an account. These errors usually occur because of manual work, calculation mistakes, or incorrect understanding of the transaction. Errors of commission may be of the following types. Error of recording. This error arises when any transaction is incorrectly recorded in the book of original entry, that is journal or subsidiary book. This error does not affect the trial balance. Let us further understand error of commission with an example. A credit sale of $1,500 to John is recorded in the sales book for $1,050. The correct entry for this transaction is displayed on your screens. That is, debit John account and credit sales account for $1,500. However, the entry is recorded with a wrong amount for $1,050. However, it has been correctly debited to John account and credited to sales account. The impact of this wrong entry is sale is understated by $450 and the debtor is also understated by $450. Another type of error of commission is error of casting. This error occurs when totals of a column in any book are calculated incorrectly. This error affects the trial balance. Let us understand error of casting with an example of sales book entries. Various customer account balances are: for customer A, the balance is $1,000, customer B, the balance is $1,500, and customer C, the balance is $2,000. The total of all customer outstanding balances comes to $4,500. However, by mistake, the accountant totaled it as $4,050. The impact of this error of casting is that sales account will be understated by $450. This type of error happens mainly in sales book, purchase book, cash book, and expense register. In this slide, let us learn another error of commission, that is error of posting. This error occurs when the entries from subsidiary books are posted incorrectly to the ledger. Error of posting may or may not affect the trial balance. Let us understand various posting errors with example. First example is that of posting with the wrong amount. Goods for $900 are sold to Alex on credit. However, an amount of $600 is posted to Alex's account. The impact of such error is that debtor's account is understated by $300. For such an error, trial balance will not match. Now let us take another example of posting to wrong account. Goods for $900 are sold on credit to Alex. However, the entry is posted to the account of Alexi Trading instead of Alex account for $900. In this example, the correct amount is posted but to a wrong account. Let us understand the impact of this error. Debtor's account of Alex is understated by $900 while the debtor's account of Alexi Trading is overstated by $900. For such an error, trial balance will match. Now let us take another example of posting to the wrong side of an account. That is, the account description to which the amount is posted is correct, but the side of posting is wrong. For instance, a cash payment of $500 is made to a supplier. The correct entry is of this transaction is debit supplier account by $500 and credit cash account by $500. However, when the entry is posted, it is posted to the credit side of the supplier account by $500. In this case, the supplier account is correct. However, the entry is posted to the wrong side of the supplier account. The impact of this error is that supplier account will show an incorrect balance. For such an error, trial balance will not match. Another type of error of commission is the error of carry forward. This error occurs when the balances or the totals are carried forward incorrectly to the next page or the next period. Let us understand this type of error with an example. Say if the cash book closing balance is $3,850, however, it is carried forward as $3,580. In this example, the impact of this error will be that the cash balance is understated by $270. For such an error, the trial balance will not match. Error of balancing is another type of error of commission. This error occurs when the ledger accounts are balanced incorrectly. For example, if the debit total of an account is $7,200 and its credit total is $6,800, therefore the correct net balance will be $400 debit. However, the accountant by mistake writes it as $200 debit. The impact of such error in this example will be that the ledger balance becomes incorrect and the trial balance may disagree. Error of duplication is also another type of error of commission. This error occurs when a transaction is recorded more than once. For example, say purchase of goods transaction for $1,200 is recorded twice in the purchase book. The impact of this error will be that the purchases will be overstated by $1,200 and the profits will be understated. In this slide, let us learn about the error of principle. When a transaction is recorded in contravention of accounting principles, it is known as error of principle. Such errors do not affect the trial balance as the amounts are placed on the correct side of an account but in the wrong account. It happens when we classify a transaction incorrectly. For example, treating capital expenditure as revenue expenditure or recording a revenue item as an asset. The key characteristics of errors of principle are correct amount and correct double entry is recorded. However, the account classification is wrong and there might be an accounting principle violation. In this slide, let us understand some common type of errors of principle with examples. One of such error is when capital expenditure is treated as revenue expenditure. For example, purchase of machinery for $10,000 is debited to repair expense account. Therefore, the wrong entry passed is debit repair expense account by $10,000 and credit cash or bank account by $10,000. Whereas the correct entry is debit machinery account for $10,000 and credit cash or bank account by $10,000. Now the impact of above error is expenses are overstated, profit is understated, and the asset is also understated. Another common type of error of principle is when revenue expenditure is treated as capital expenditure. For example, when a routine maintenance expense of $2,000 is added to the machinery account. It is an error of principle. The wrong entry passed is debit machinery account for $2,000 and credit cash account by $2,000. Whereas the correct entry is debit repair expense account by $2,000 and credit cash account by $2,000. The impact of this error is the profits are overstated and the assets are also overstated. Another common type of error of principle is when personal expense is treated as business expense. For example, when owner's personal electricity bill for $500 is recorded as business expense, it is an error of principle. The wrong entry which is passed is debit electricity expenses for $500 and credit cash account for $500. However, the correct entry is debit drawings account for $500 and credit cash account by $500. The impact of such an error is business expenses are overstated and the profit is understated. Another type of error of principle is when income transactions are wrongly classified. For example, interest income received for $1,000 is recorded as sales. The wrong entry passed is debit cash account for $1,000 and credit sales account for $1,000. Whereas the correct entry is debit cash account by $1,000 and credit interest income account by $1,000. The impact of this error is that sales is overstated while the other income is understated. Let us understand why errors of principle are dangerous. In spite of these errors, the trial balance will still tally, making it difficult to imagine that such an error exists. Such errors are very difficult to detect without deep review and investigation. Such error has a direct impact on the financial statements and decision making. A simple rule to remember regarding error of principle is transaction amount is correct while the account head is wrong. Let us understand how error of commission is different from the error of principle by making a simple comparison. Error of commission is a clerical mistake in nature, while the error of principle is conceptual mistake in nature. In case of error of commission, trial balance may or may not match, while in case of error of principle, trial balance usually agrees. Wrong posting of an amount is an example of error of commission, while the capital expense treated as revenue expenditure is an example of error of principle. Let us learn about the compensating errors. These errors occur when one error overstates an amount and another error understates an amount, and both errors are equal in value. So the net effect is nil, or we can say one error compensates the other error, and as a result there will not be any difference in the trial balance. These compensating errors are considered to be the most dangerous errors in accounting because the trial balance tallies, making it difficult to imagine the existence of any error in the accounting. Since one error compensates the effect of another error, such errors remains hidden and are very difficult to find out. Though the trial balance tallies, however, as a result of such errors, the financial statements are still incorrect. These are the most difficult errors to detect in accounting. Let us understand more about compensating errors with examples. Compensating errors may occur due to the overstatement or the understatement of the same amount. For example, sales and purchase are both overstated by $1,000 is an example of compensating error. As a result of such error, both debit and credit sides are increased equally. Therefore, the trial balance will still match, however, the profit calculation will be distorted. Another example is error in debtors and creditors account. In case due to error accounts receivable is understated by $500 and the creditors are also understated by $500, still the trial balance will tally. However, the working capital position will be incorrect. Another example of compensating error is wrong posting in an incorrect account, which means the amount posted is correct, however, it has been posted to a wrong account. For example, the rent expense of $300 is posted to the salary expense account. As a result of this error, the rent expense will be understated by $300 and the salary expense account will be overstated by $300. Now the impact of this compensating error is that overall cost of the business will remain same and the trial balance will also agree. However, the classification of individual expenses will be wrong. Now let us take another example of error of omission, which also becomes an error of commission. For example, a sale of $800 to a customer is completely omitted and another sale to another customer is wrongly recorded as $800 extra. The impact of this error is that one error will reduce the revenue while the another error will increase the revenue. The trial balance will still matches, however the respective customer accounts will be wrongly reflected. Now errors can be of two types, one-sided errors or errors affecting the trial balance and two-sided errors or errors not affecting the trial balance. Let us now understand more about one-sided errors or errors affecting the trial balance. One-sided errors or errors affecting the trial balance are those errors which affects only one account and thus the trial balance does not match. It means these errors affects only one side, either the debit or credit side of an account. And as a result, the trial balance will not agree. Such errors happens when double entry principle is not properly followed. Let us further strengthen our understanding of one-sided errors or errors affecting the trial balance with examples. One such type of error is the error of one-side posting. For example, rent of $1,000 is paid in cash. For this business transaction, correct entry is debit rent account for $1,000 and credit cash account for $1,000. Now, while posting, only debit rent account entry for $1,000 is recorded and the cash account credit entry is missing. This will result into a trial balance difference of $1,000. Another example of one-sided error is posting with wrong amount on one side of an account. For example, a purchase of $2,500 is made for cash. The correct entry for this transaction is debit purchase account for $2,500 and credit cash account for $2,500. Now the purchase account is debited correctly for $2,500. However, the cash account is wrongly credited with $2,050. Therefore, it will result in a difference of $450 and the trial balance will not tally. Let us understand some more one-sided errors. They may occur in the following cases. Posting only one aspect of the journal entry in the ledger. Posting a journal entry on the wrong side of an account. Wrong totaling of the subsidiary book. Posting the correct amount in one account and wrong amount in other account. Wrong totaling or balancing of a ledger account. Omitting to post the totals of the subsidiary books. Error in carrying forward. Omission in writing the balance of an account in the trial balance. Writing a balance in the wrong column of the trial balance. Wrong totaling of the trial balance. If you enjoy the content of my channel and appreciate my teaching style, please subscribe, share and like my YouTube channel @AccountingBuddyNB. Thank you and goodbye for now.